Greetings, members one and all of the Salivation Nation. Is the worst over as fear has overtaken the markets? Let's explore. Yes, as most of us have seen over the last day, we have seen quite an exciting and scary, in a sense, market drop, the worst since the 2008 crisis, and was all over the cerveza sickness, the Mexican cerveza sickness, and the economic oil war between Saudi Arabia and Russia. And today we have a bit of news to share about what's going on that has caused the markets to recover half of their losses. Let's explore this article first from CNBC. Gold dips 1% as policy easing hopes to buoy equity markets. Gold slid over 1% on Tuesday after breaching the $1,700 ceiling in the previous session. We covered most of that live on our market updates, on our market watch on Sunday nights at 6 p.m. It's signs of global policy easing to cushion economic impact from the virus epidemic eased some of the investors' concerns. And by that, it means, essentially there was a bill that has been approved or sent through Congress, and they're working on other measures as well to help ease some of the stuff with government spending. It seems like that's the answer to everything is government spending. And but the markets like that kind of thing, apparently. They liked it when Obama did it, and they're liking it when Trump does it as well. Spot gold lost 1.6% to $1,653.23 an ounce, and U.S. gold futures fell 1.35% to $1,653 an ounce. People are rebalancing portfolios. We expect to hear more dovish remarks from the global central banks and some policy easing, said Michael Matuszek, head trader at U.S. Global Investors. Bullion rose as much as 1.7% on Monday to its highest since December 2012 at $1,702.56 an ounce. After a rout in global equity markets on prospects of the economic impact of the sickness outbreak, and an oil price war triggered a crash in crude prices. U.S. equities surged 2% at the open as signals coordinated policy easing to avert a global recession and soothed traders. U.S. President Donald Trump vowed to take major steps to bolster the economy, and Japan unveiled a second package of measures worth about $4 billion to cope with the fallout from the virus outbreak. The U.S. Central Bank, having delivered an emergency rate cut last week, is expected to cut rates again at its next meeting on March 18th. There's not much more they can do there. It seems like in that last emergency rate cut, only panicked the markets. It didn't help a bit. There's not much more they can do after the more they cut. We're sitting at 1.25% now, and we're going to move to negative interest rate at this rate as it goes. The European Central Bank is under pressure to help bolster economic growth. It meets on Thursday. U.S. Treasury yields rose from all-time lows, and the dollar also rebounded after major losses. However, the specter of this particular sickness remained in the background, with over 114,300 people infected globally. And more than half of those people have already recovered, by the way, but that's not being talked about. It could be that Tuesday's rebounds in the equities markets could be the so-called dead cat bounce that occurs after major market sell-offs, only to see prices continue to trend down. That's very true. We'll see. This is what Kitco Metal Senior Analyst Jim Wyckoff said in a note, and we're going to look at his article today here momentarily. Holdings in the world's largest gold-backed exchange-traded fund, SPDR Gold Trust, rose to 30.99 million ounces, its highest since October of 2016. Palladium fell 3.2% to $2,409. We haven't seen that in quite a while. Silver declined about 0.5% to $16.89, and platinum rose 0.9% to $870.32. Let's take a look at the precious metal prices now. Here's where they sit right now. Gold is at $1,650 now, and silver is below $17 again. So it's fallen a little bit, 12 cents here. But gold took the bigger hit today. Platinum is up $8, and palladium is down $47. Look at that. Palladium is down 1.99%. It took the biggest hit today. Rhodium, I didn't mention this in yesterday's video, but rhodium gained. It's now at $13,000 in the ask price. Crazy. And as here is the Dow Jones Industrial Average, we can see that it's recovered about half of its losses here. It's now 25,000, which actually, if you think about it, in the grand scheme of things, that's a good number. But, but if you take a look at where things are, the markets here, here's the article from Kitco, from Jim Wyckoff, that they're down as U.S. dollar index posts sharp rebound Tuesday. Gold prices are solidly lower in midday U.S. futures trading Tuesday on a corrective pullback after hitting a 7-year high above $1,700 on Monday. With risk aversion and anxiety on Tuesday are not quite as high as seen on Monday, the U.S. stock market is still very wobbly. However, on this day, the gold and silver future market traders decided to focus on bearish aspect of this very strong rebound in the U.S. dollar index after it hit a 13th month low on Monday. April gold futures were last down $21.50 an ounce at $1,654.10. May COMEX silver prices were last down 0.194 at $16.86 an ounce. Global stock markets rebounded Tuesdays following Monday's rout. However, U.S. stock market has faded after opening sharply higher today. Traders and investors are still wondering if Monday marked the worst of the global stock market meltdown, or if it could be that Tuesday's rebounds on the equity markets could be the so-called dead cat bounce. We referenced that in the prior article that occurs after a major market sell-off. So we don't know if the worst is over, because if this is a dead cat bounce, then it's not. If it's not, then who knows? Maybe things will go. It just depends on how these meetings go. Nobody really knows for sure. Trump and his administration have been meeting to discuss financial relief for U.S. businesses and workers impacted by the Mexican cerveza sickness outbreak. An announcement was thought to be likely to occur as soon as today. However, reports say that likely won't happen now. Look for major central banks of the world to continue to provide monetary stimulus to their economies in the coming days and weeks. Schools are closing. Italy has shut down the entire country over this, and both Biden and Sanders have postponed campaign rallies. There's yet to be seen if Trump will do the same thing. We'll find out. The general public's fear of this thing appears to be growing. The U.S. Center for Disease Control has just issued a warning for Americans over 60 years old to stay home and not travel, if at all possible. It's a bit surprising that U.S. stores have not seen more consumer hoarding of basic goods. I'm hearing a lot of toilet paper has been bought, although anecdotal reports say cleaning supplies are running low. Reports now say the entire country of Italy is quarantined. Yep, television news is showing pictures of empty airports in Asian cities. The benchmark 10-year U.S. Treasury note saw its yields rise above 0.7% Tuesday, after dropping to a record low 0.37% Monday. That's a positive sign of a marketplace that is not quite so fearful. Some tips to you from the CDC. Don't touch your face like I'm doing right now. I'm touching my face. Don't do it. Don't touch your face. Don't put your hands in your eyes. Don't pick your nose. Don't eat your boogers. Make sure you wash your hands thoroughly for 20 seconds. I counted it today after I went to the bathroom while I was employed at work. I went and washed my hands, but I only did it for 15 seconds, folks. Only 15 seconds. If you have hand sanitizer, make sure it's got an alcohol content more than 60%, or just lick a silver coin. That's right, silver is antibacterial, so you can lick a silver coin. You can carry a silver coin in your pocket, and I do that, and you can take that silver coin out of your pocket. You can flip it. You can rub it, you can sniff it, and you can lick it. That's right. That's the thing to do. That will protect you from sickness in general. And by the way, this particular thingamajiggy that we're talking about here, it is essentially a bad cold of a different strain. And so people are nervous about it because it's coming from Wuhan. I don't know why they don't call it the Wuhan sickness, or I can't even say the actual word. I'm censoring myself even over the actual word of the starts with a V, ends with an S, and has iris in it. But anyways, so anyways, NYMEX crude prices are solidly higher and trading around $33.75 a barrel after careening to a 4-year low on Monday. Russia and Saudi Arabia are in an all-out price war that does not look likely to end anytime soon. Some rumors say that President Trump called the Fresh Prince of Saudi Arabia and asked him to ease back a bit. Veteran energy market watchers know that both Russia and Saudi Arabia hate the North American oil frackers that have dramatically changed the global energy landscape in the past 10 years. Both countries could be planning to pump so much oil as they can in the coming months, which would likely bankrupt many U.S. and Canadian shale oil producing companies. Then Saudi Arabia and Russia could start to close their oil spigots and drive crude prices higher again, which is another reason why I believe that technologies will evolve that make it even more efficient, even better here in the States. But to me, that's American ingenuity at work. And I think we should continue to improve upon that doesn't happen, and also get off of foreign oil and seek alternative energy sources as they become more viable. So gold future prices were near the session low and a corrective pullback from recent gains. And we're not going to go through this technical analysis here, but we can see that obviously the prices are where they are at now. So a pullback, we'll see what tomorrow brings to make sure this isn't a dead cat bounce, but it may take a couple of days. And once these stimulus measures do take effect, that'll be a telling thing. One of the things is a tax cut, and I think that's good, but they're also going to be putting a lot of money. I've heard $8 point some odd billion at this for the economic impacts of this type of thing. We'll see how that plays out. But there you have it. That's the kind of the news of the day. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.